Smooth 98.1. It is gone past 6:30. Here we are for Business Express. Now, today I got not just one, but two guests. Well, actually, I've got Rotus, who is not really a guest, but the host of the show. There you go. Hi, Rotus. How you?
Morning, Shokwe. Morning to all our listeners and viewers out there.
Yeah. Oh, you know what? I swear sometimes autopilot, right? And we are today. We're joined by Ajibola Akamo, who's an investment analyst with Nairametrics, because we have got actually for conversation today the astronomical rise of the NGX with Nairametrics. We're already streaming live up on youtube.com/smooth981FM Lagos. So make sure you go check us out in video so you can see the faces that belong to the voices. Okay, so also. Make sure you join the conversation as well by actually leaving a comment on the live stream while it's there and sending your WhatsApp messages into 0809 444 981 and taking it to Twitter. And we are at Smooth981FM. Rotus is at Rotanquote, and make sure you tag us for your comments. Okay, so Rotus, over to you.
All right, thanks, Shokwe. So it's great to see that Nairametrics is bringing us Tuesday's edition of Business Express. Ajibola, 6.2 trillion naira appreciation on the NGX from January through May. I mean, it's incredible. What's behind that massive appreciation?
Good morning, Rotus. Thank you for having me. Like I said, we've had this conversation before, me and you, and the NGX is one of the top performing markets in the world right now. Even when developed economies and developed markets are down over 20% and more, we're seeing significant appreciation because of the earnings we've been seeing by companies listed on the NGX. We're looking at the Q1s and their full year results. They've been performing astronomically well. And what I believe is happening is there's a little bit of concern about inflation. I believe that the pricing is there's some sort of price transfer that's going on from the manufacturers and down to the consumer. So what do I mean by this? We're not necessarily seeing an increase in performance in terms of quantity of goods sold, but we're seeing a lot of money being spent for these goods, and that is caused by inflation. So what is happening in the NGX right now, what's happening to companies listed on the NGX, like for example, the cement industry, they're not necessarily making an increase in sales, but what we're basically seeing in the NGX is they are increased their prices of their goods and services, and then that price is being transferred because of the in the inflation rate, like I said, being transferred to the final consumer. So they're paying more for the cement that they did a year ago, and that is what is causing the increase in the prices of goods and services. So yes, their NGX is doing well. 6.2 trillion is amazing. We're seeing good performances from even the telecommunications industry, Airtel, Africa, MTN. Airtel has a market capitalization of 6.2 trillion as of yesterday. That's astronomical. As it is the highest capitalized company on the NGX. And I believe that over the time or over the course of the year, we're still going to see a little bit of increase, especially now that we're seeing that these companies are performing well, and the Q1 results show that. I think BUA Cement posted a 33% year on year for Q1 2022, and that shows that companies are actually doing better, increasing their profitability. I mean, we saw what happened with Flour Mills, the results 28 billion, fantastic. So I think that trend is going to continue.
Okay, so you've mentioned the other markets around the world and the depreciation. US stock market, I saw a bit of a rebound yesterday, but other markets under pressure. Should there be any worry that the NGX is going in the opposite direction for its own reasons and bucking the global trend, or do you just ride the wave, enjoy your capital appreciation, your dividends, and don't worry too much?
All right, so that question is a little bit tricky, because there's a reason why the other emerging economies are falling. We're seeing an interest rate, especially in the US, with Federal Reserve increasing the interest rate, and this year we're going to see them tamper with the assets. And these are contractionary monetary policies, and Nigeria has already started implementing contractionary monetary policies. We saw that last month when they increased the interest rate to 13% from 11.5%. And the last time we saw that happen was September 2020. And what does that mean? If you're increasing the interest rate, it means that it is more expensive to access funds. That means that if you're going to the bank, the interest rate now is higher, And in turn, it's very, very difficult, or people are discouraged to borrow money to actually go about doing this and business and whatnot in the economy. So I think very soon we're going to start seeing the effects of contractionary monetary policies, because now the central bank is now focused on taming the double-digit inflation rate in country. Our inflation rate is 16% thereabouts, as at the last report, and that's actually very, very bad. If the inflation rate is 16%, it means that compared to a year ago, the prices of goods and services have increased by 16%. And if we're being honest, that's not a good thing. And when the inflation rate has increased, I don't think as your salary increases in the last 1 year, maybe you will tell us.
No.
Yeah, Jula, no.
So, that's going to be an issue, and the central bank wants to tame inflation rate. And because of the fact that they want to tame that inflation rate, we're going to be seeing a lot of contractionary monetary policy. And when contractionary monetary policies kick in, like we saw in the US market, we see massive sell-off in tech stocks. We saw in the cryptocurrency market, we see Bitcoin falling from 50K, now it's trading below 30K. I'm not even sure if it's trading below 30K right now, because Bitcoin just been up and down. And we're going to see that kind of effect, especially when a lot of these portfolio managers and retail investors actually go to the drawing board and see the effect of what it means to have a contractionary monetary policy. And once we understand that, I think that we're going to start seeing a significant level of profit taking. And we saw that last week. The NGX closed bearish 2.18%. And we're going to continue seeing that trend. Although we started at least on a 2-day winning streak Friday and yesterday. But if you're looking at the market depth and the market participation, we're seeing this more leaning to the bearish side. It's the swords. In Nairametrics report, the swords, the stocks worth over $1 trillion. I've been the ones trying to keep that performance up and growing, but that cannot necessarily, the swords cannot necessarily carry the entire market, although they account for over 72% of the market capitalization. But that balancing is going to whistle out, and we might see significant levels of profit taking before we reach the upside. Yes, please go ahead.
Quick question. Yeah. From the layman's point of view, right? So you've described everything for us. Now, using a visual aid, bubbles defy gravity and they float above the earth, right? They float up into the sky. Are you saying, is this a bubble and is anything going to burst it? Is my question.
All right. So I wouldn't necessarily call it a bubble, because we have the performance of the company backing up the gains we're seeing in the market today.
Okay.
Right? But what I'm saying is investors need to be cautious, because contractionary monetary policies are already setting in, and the inflation is showing that prices are being there's a sort of transfer pricing being from the manufacturing to the consumer. So the manufacturers are increasing the price because of cost of goods are going up, meaning basically the cost of things that they're using to produce their products and services, right? Those are going up. And because those are going up, they don't want to bear that cost alone. They're transferring that price to me and you that are buying
yes.
I mean, tomato last year, 1,000 naira, tomato this year, 1,000 naira. We can see the quantities as dropped.
Things that we used to think were provided by the earth for free. Suddenly we realize that there's costs going into them.
Exactly. So because of that problem, we're now seeing that their performances are increasing, but not necessarily the quantity of goods and services are increasing, right? So a lot of people are spending less, but then there's more money chasing those goods. So that's why we're seeing an increase in their performance. Right. But ultimately, when contractionary monetary policy sets in, it shows that there's going to be less and less cash with people. And when there's less and less cash with people, rationing starts coming into play. When there's rationing, then less and less people will be able to buy goods and services. If there were 50 constructors or contractors that are constructing buildings and services, we might see that figure reduced to maybe 30 or 25 because of that effect. So that's what I'm trying to say.
Okay, now we actually had a message in from Ajibola Akamo who says, Rotus, one egg costs 80 naira or more now, 100 naira in some places. Do price increases and the pressures on people's pockets not have an effect on events at the stock exchange? People's earning power is being eroded. So you've just really discussed
Yeah.
Okay, and Zikolo says, a salary increase? Only a few people have been lucky enough to enjoy that. On the other hand, many have had their salaries slashed, especially since after the pandemic. Yes, prices of goods have gone up by 16%, but in reality, it's actually about 40% when you add the Nigerian factor. I have to say, when you were saying 16%, I was really counting the cost and I was like, Yeah. Okay. So anyway, let's move on. We've still got more. We got about 4 minutes. So
In fact,
Okay.
I just remembered. I'm sorry, I have to throw this in. Happy birthday to Sonia. Sonia Dennis, our head of marketing here at Smooth. Today is her birthday. She's a June baby. So Sonia, love you. Happy birthday to you. And in fact, for me to buy her a gift is going to cost more since we're talking about costs and things rising. But Ajibola, any concerns over domestic investors carrying the load on the NGX?
Personally, I'm not concerned. In fact, I welcome it. We saw the April report for participation on the NGX. We saw that domestic investors accounted for 86% of the transactions. And we saw that retail investors, that's basically you and I, increased their performance in the market from 60 billion to 68 billion, as well as, the domestic institutional investors. Those are the stockbroking firms, the asset management firms that are registered in Nigeria. They also increased their performance, I think, from like about 90 billion to 110 billion. And it shows, I said this before, it shows that Nigerians are buying Nigerian goods, right? Or Nigerians are buying Nigerian stocks. And that's actually very, very good. You need to encourage local participation in our market. But although there's still concern because we're still seeing, a lack of interest from our foreign counterparts in our market. Although that's a cause of concern, we have, for a time period in the past, we saw, the foreign participation accounting for majority of the transaction, and that doesn't speak well with our, economy and our exchange. It shows that there are people less and less interested in our markets, and that was then. But right now, with local participation up, I'm really, really happy to say that, Nigerians are actually buying Nigerian stocks, Nigerian goods, and I think it's because people are seeing the astronomical results that we're seeing in profit after tax, revenue, and whatnot, and we're seeing that these performances of these companies are increasing over time. So it's pretty awesome that we're seeing that, honestly, and I'm really happy. I'm really glad that local participation is there, but it is still a cause of concern because our foreign counterparts are not increasing their investments in the country. So, for example, I'm sorry to bring this up. You see what happened on Sunday with the whole church killing and whatnot. Those kind of things.
we had to discuss it yesterday on Business Express.
Full discussion
it's
yesterday.
It's a major factor.
Yeah.
I'm sorry to bring the bad news back, but those kind of factors are the reasons why foreign investors run away from the economy. That's why they stay away from our economy. When they see that there is instability in security, instability in power, all these things have a rolling effect into why people would not, or foreign people would not come to invest in Nigeria. And I will even ask Nigerians, you guys listening, do you think that you will invest in a country like Nigeria where, on a fine Sunday where people are praying in the church, somebody can just decide to go up and shoot up the whole church? Would you be able to invest in that kind of country? I'm sure that,
to Twitter, please, because we've come to the end of the show, Ajibola.
All right.
We've also got messages that have come in. Ogano Chuko says, a reduction in economic activity as a result of interest rates, won't it increase unemployment? Yes or no?
Sorry, can you say that again, please?
Ogano Chuko says, hold on, trying to go back.
Increase in interest rates
and economic activity as a result of interest rates, won't it increase unemployment?
Yes, it will. It will increase.
And Gilbert Musa from Festac says, despite improved earnings currently from stocks, we need to ascertain the level of individual participation on the floors of the Nigerian Stock Exchange from 2010 till date. Has it increased?
That's going to be difficult for me to say right now, but like I said, there's an increase in domestic participation. In fact, most of the transactions that are going on the exchange right now is from the local Nigerians, basically me and you. We're the ones driving the market right now.
Okay, and very quickly, this one in from Joel who says, Rotus, we will charge you for that romantic shout out. While Samuel George says the major way employees get salary increases by changing jobs. And final messaging from Benga Akamu says, I do remember in the 90s and early 2000s, how the stock market was doing so great. And he says, I'm guessing defying the trend. Okay, and that is that. Thank you so much. That was quite an interesting one. Ajibola Akamo, who is an investment analyst with Nairametrics. Thank you for joining us on the show. I hope to see you again. And
thank you for having me.
Thank you. And of course, make sure you check Rotus out and find him and ask him his questions up on Twitter. He is at Rotanquote and we are at Smooth 981 FM. Gentlemen, it's been a blast. We'll do this again to Rotus tomorrow.